Surprisingly tough forecast for housing in 2020 released today. Diana Olick is at a housing conference in Austin. With more, Diana, what have you learned?
What's up, guys? Steve here with the Ram Real Estate Investing channel, the channel where we talk about how to make money in real estate investing. And today we're going to be taking a look at a CNBC news report that was put out last week on a Realtor.com article entitled "Home Sellers Will Remain on the Sidelines in 2020." And in this article, Realtor.com pretty much predicts that housing prices will go down. Now, as a real estate investor, I'm constantly trying to stay on top of what's going on with the housing market so that way I can anticipate any changes and make good investment decisions. And usually when I look at articles like this, they all say the same thing. Housing prices will go up. So when I see an article that says housing prices will go down, I take note of it and I make a YouTube video. Now, I'm really curious to hear to what extent they think that prices will be dropping and why. I mean, on one hand, we have what seems to be a really good economy. Things are going well, interest rates are low, and we're in the longest running bull market on record. Now, on the other hand, we're in the longest running bull market on record. We're also currently in a trade war with China. The yield curve inverted this year, indicating that probably within the next 2 years, we might see a recession. And in addition to that, we have elections coming up. So I'm curious to see which of these topics come up in the article. But without further ado, let's jump right in and let's take a look.
Well, Contessa, you would really think this would be a much better forecast given the growing demand for housing, the strong economy, and still historically low mortgage rates. But Realtor.com, one of the nation's largest home listing sites, says the housing market will slow down next year, and we could see a very troubling new record set. The headline of its report is "Home Sellers Will Stay on the Sidelines." That will cause the housing shortage to get even worse, and supplies could hit that record low. Now, low inventory will cause sales to drop just under 2% annually, and home prices will flatten nationally.
Hold on, did I hear that right? Did she say that low inventory will cause there to be lower sales, which in turn will cause prices to decrease and flatten? Let me play that back just in case.
That will cause the housing shortage to get even worse, and supplies could hit that record low. Now, low inventory will cause sales to drop just under 2% annually, and home prices will flatten nationally.
So you're telling me that when supply goes down, the demand goes up, and in return, prices will go down and flatten? Okay, so I am aware of the fact that these are news reporters, not real estate investors. So it's possible that maybe they read the article wrong and are putting out wrong information, or maybe they're putting out information to get views, so they're putting out fake news. But I think just to be safe, let's go ahead and take a look at the article itself and see what it says. No? Yeah, they're right. That's what it says. Huh. Well. Okay, well, let's take a look at who wrote this. Okay, so I've been scouring through the site, and this is the best I could find about Realtor.com. So whoever actually wrote it, I'm not seeing their name. Maybe I'm just missing it, but it says it's Realtor.com. And Realtor.com is very reputable. Maybe I'm just reading something wrong here, but to me, this doesn't make a whole lot of sense. I totally could be missing something here. If you see it, do me a favor, put it in the comments, let me know. Or if you're seeing the same thing that I'm seeing and it just doesn't make a whole lot of sense to you, let me know that too. Go ahead and put that in the comments for me.
As millennials, who will account for half the home buying market, will struggle to afford overheated prices in some markets.
Okay, now on that point, I agree with them, and I've been saying it for a while. If prices get too high, at some point people can't afford it anymore, and then prices will have to come down. Okay, and here it is. I found it in the article, and this makes a whole lot of sense now. Okay, affordability brings secondary markets to the center stage. As buyers are priced out of the suburban environments near large metropolitan areas, they will begin searching for family-friendly lifestyles in other metros across the state lines. Cities in Arizona, Texas, Nevada will continue to benefit from shoppers looking for more affordable alternatives to California. Meanwhile, home seekers from expensive Northeast markets will find the warmer options in the Carolinas, Georgia, and Florida attractive. Midwest markets will become more attractive as buyers will find the affordable housing and solid, diversified economies of Ohio, Indiana, and Kansas compelling. And right here, they also mention the wild card of the elections. And so right here, I feel like they're bringing some pretty solid arguments to the table that if things are just getting too expensive in California, people aren't going to be able to afford them, they're going to leave, and then prices will decline as people leave. And that's exactly what I've been saying. That makes a whole lot of sense to me. Okay, now I finally put two and two together.
However, Realtor.com is actually predicting prices will go negative in some markets, the first time that's happened since the housing crash. Those cities include Chicago, Dallas, Las Vegas, Miami, Detroit, St. Louis, and San Francisco. Now, with home values weakening, sellers will have little incentive to put their homes on the market because nobody wants to catch a falling knife.
Okay, now let's pause this map here for a second because this seems really odd to me. Like, Okay, if prices start declining, I totally understand that areas like San Francisco, Las Vegas, Dallas, and Miami will start to go down. San Francisco is the most expensive market in the nation, and in my opinion, it's inflated and it has to come down, right? But then you have St. Louis, Chicago, and Detroit on here, and these are not like super aggressive markets. And on here too, they have Detroit declining by over twice as much as San Francisco. Like, I just don't understand, like, what, to me, this just seems really odd.
Single-family home construction, though, is increasing, and the forecast is for a 6% annual gain. But so far, it has largely been on the upper end of the market, not at the entry level where demand is strongest. Builders are starting to pivot toward cheaper homes, but they're up against tough cost constraints. Now, the only bright spot in this forecast is that Realtor.com does expect mortgage rates to remain low. And in fact, they just dropped again yesterday on that China trade news.
Okay, so I do feel like right there they ended it on a good, strong point, which is that the trade war with China could impact the economy. So overall, I'd have to say that this video leaves me confused. Okay, let's take a look at their numbers here. All right, so let's take a look here. They have a housing prediction for 2020, a breakdown of the housing markets, their sales growth, and their price growth. So let's take a look at Cleveland and Sacramento, my markets. Looks like Cleveland is growing and prices are going up. And Sacramento sales will slow down, but prices will still slowly climb. Okay, so if we go into a crash, this is one of the things that I like about the Midwest markets, okay? If you're going for appreciation and you're trying to get a big pile of cash and get a lot of money, yeah, you're gonna wanna go for the coastal markets like California, New York, some parts of Florida, Las Vegas, things like that. But if you're looking for steady cash flow and markets that won't really be impacted, if there's a huge change and dramatic impact on the market, there's a lot of markets in the Midwest that will stay just steady. You're not gonna see a whole lot of appreciation, but you will get consistent, constant cash flow. And that's a market like Cleveland, Ohio. So right now, while things are kind of uncertain, I prefer the Midwest because I feel like it's a safer bet. And always remember that nobody has a crystal ball, okay? Nobody knows for sure if the market's gonna go up or down or what it's gonna do. But always have yourself ready and be in a position so that way you can take advantage of a market when it changes. So if things go down, when it goes down to the bottom and everybody's afraid, that might be a good time for you to buy, because if you buy at the bottom, it's going to go up and you can maybe gain some appreciation with that purchase. And just remember, I always hear Robert Kiyosaki say that when everybody is being greedy, be cautious. And when everybody is being cautious, be greedy. Because most of the time, the crowd is typically doing the wrong thing. So always keep that in mind. Take a look. What is everybody doing right now? And that should give you a good indication of what maybe you shouldn't be doing or what you should be doing. So yeah, I hope you guys enjoyed this video. I saw this, just want to do a quick YouTube video on it. And if you like this, do me a favor, hit the like button. If you haven't already, hit the subscribe button, turn on the notification bell so that way every time I upload videos, you can be notified. I upload videos every Friday on real estate investing. And again, I hope you enjoyed this. My name is Steve. God bless.